Hi, this is Claire, and today I'll be covering a very interesting topic on HDB resale market. So here's something interesting. For the first time in 7 years, we see that prices have dipped over the course of the entire COVID period. So you might think that it's a good time to buy right now because the prices have dipped. What I'm going to cover today will be 4 red flags that buyers overlook and how you can avoid overpaying in today's market, especially if you're looking to buy a HDB resale today. So just to give you a little bit more context, the HDB resale market has gone up over the past 7 years and it's gone up quite consistently to the point where there are a lot of people paying cash over valuations for HDB flats just because the supply is low and the demand was going up a lot. What is happening today is that the government has these 3 key factors to just clamp down the prices, and at this point of time what we are seeing is that it's taking very much in effect, where over the past 7 years, this is the first time the prices have dipped already. So as a HDB resale buyer today, what should you be looking out for? Potentially being able to get a good deal so that when it comes to exiting 5 years down the road or 10 years down the road, you would not be in much of a disadvantage considering the prices have already been high. So there are 3 things. One is a 15-month wait-out period introduced in 2022. This is to prevent the downgraders and the people right-sizing to be overpaying for million-dollar homes. This may be relaxed in 2027, but this would help to steer away from the million-dollar homes where I sell my landed or I sell my condo for 4 to 5 million or easily 6-7 million. I can fully pay a 1.5 million HDB, and that's what we were seeing in 2020 all the way to 2022 before this was introduced as well. So this would be able to help lower the COV for buyers who really want to be able to afford those homes. And second point is increasing supply of HDBs. You can check this in the HDB website as well. From 2022 onwards, we see a 35% increase in terms of BTO supply. And it's kind of really stabilizing this year where we see a good pickup rate of the BTOs. The government is trying to steer the demand for you as a HDB buyer to go to BTO instead of coming to resale and pushing up the prices because the demand is high. At the same time, in 2026, because of the previous surge, we will also see more units MOP in 2026. They're overall increasing the supply of the market. Buyers will have more choices. So what has the 3 things resulted in? Is resulted in overall volume dropping. So we see that the volumes have dropped overall over the course of last year, 2025, by almost 3,000 units. That means the overall volume of transactions have gone down because of all these measures that are happening in the market today. Overall price index have been hovering around the same levels since 2025. So currently what we're seeing is entering 2026 that the price index has already stagnated, and there are some units in the other regions that have already gone down quite a bit. So what is likely to happen when it comes to looking at price index in this particular pattern, looking at really just 15 years prior to this and up to now? Sometimes when there's a surge here, there will be a form of stagnation and then a dip. And then this period of time, because of the oversupply of units in the market, there has always been a stagnation. And then now we're seeing the same thing again. COVID hit here, the prices have gone up, and it's gone up quite a significant period of time. And right now it has stagnated, and some of the areas have already dipped a little bit. What we might be seeing is that dipping of prices, which are already happening in a couple of regions today, and stagnation of prices, depending also on the supply in your area. And over the past 8 years, if you just want to look at it from a macro point of view, today I just want to buy HDB, comfortably be able to afford something that is of a good size. There's totally nothing wrong about it, but we want to understand the price movements across some of these towns for 4-room flats or 5-room flats over the course of a couple of years, from 2017 all the way to 2025. Of course, the prices have gone up, but then over some of the regions like Punggol, where the supply is a little bit more, the price growth is actually slower now because every single year there's more MOP flats that are going to MOP. So as a resale buyer today, what should you be looking out for? So this is the start of where I'll be talking about the 4 red flags that you need to take note of before you come into buying a resale property today. As a HDB buyer today, the first thing that you need to look at will be the remaining lease. So this is a CPF usage table that we look at as we talk about your age and also the remaining lease of the property. Singapore is already 60 over years old, so we know that there are HDB flats that are running out in terms of lease, and the price that you might have been able to get for a very, very old development have gone up but might not be at the optimal in terms of the time that you need to take to sell. And the main reason is for me to be able to buy HDB today at a very, very low kind of risk where it's only left with 30 to 45 years old. My CPF usage will be lesser and lesser as I get older and older. In this case, if let's say I want to buy something Just for an example, a flat built in 1990, today is 35 years old and it has 64 years remaining lease. If I want to stay at this HDB for 10 years, 10 years later it's going to be 45 years of age and 54 years left of lease. And if today I want to be able to sell to a buyer that is 45 years old and this is going to be left with around 54 years of lease, I will be looking at a cut in the CPF usage that I can potentially buy at. What we are seeing here is that the pool of buyers will shrink and the CPF usage will be lesser. So we know that the remaining lease will indirectly affect the future buyer that you want to sell to. And if you're looking to buy just for the next 20 years for school or just to be staying near parents, for example, then you need to be able to bear this risk of potentially having a buyer pay full cash on the property and not be able to use CPF for that usage. Of course, there will be young buyers who will be directly impacted with the remaining lease. You want to know that in the 20-year range actually is still quite safe here. But once it hits the 50-something to 40-something to 20-something, that's where the risk comes in. The second thing is the COV trap. We know that a lot of people have been paying cash over valuation. Because the demand is high, people are willing to pay a little bit more, and that has been pushing up the prices to a certain extent. But now that the demand has been shifted to the new BTOs or other options as well, the COV portion that you're paying for must be handled very carefully. Last time we do see people paying 80k, 120 for mature estates, up to 200k for COV. But today, the offers that we've been getting for HDB flats, they want to cap their COV at 40k to 50k. And this is where I think as a HDB buyer today, you need to be extra cautious, wherein you need to know that the COV that you're paying for is going to be something that is more reasonable in today's market. Because this one is really mostly in the 2021 to 2024 range, where you're paying a significant COV, maybe for renovations, but really just to beat the competition that you're getting at that point of time. But today the competition is not that much anymore, so the COV that you're paying for must be justifiable. So in this case, if you're paying 40k COV, it has to be justified by some form of renovations, your floor level as well. That will definitely affect your future selling price as well. So I think right now the healthy range of COV that people are paying for is going to be about 50k if it's a renovated unit and if it's on a high floor, for example, or if it's a EA or EM. There is a little bit lesser supply in the market today. The third thing that you want to understand is looking at the district that you're buying and how it will affect the prices will be understanding what is upcoming in the area in terms of supply. So if we look at the different townships, we know that there are a lot of upcoming BTO MOP supply that's going to be flooded in the market. Every single year, Punggol, there will be a few. Right now, you see Sembawang Yishun, there's quite a number of HDB clusters as well. And at the same time, also your Tengah is a new township that will have your first MOP cluster very soon. And at the same time, your Bukit Batok is also one that has a lot of supply in the market today. Understanding the prices is where you would be able to get a good sense of whether you're buying in the right district or not. So this particular map, the redder it is, that means the more volumes of transactions that are happening in the HDB market today. So we see that the very red ones, Tampines, most lovers of the East would generally like Tampines, the town where there are a lot of amenities for you to go for. Sengkang, Punggol still quite relatively popular. Now Woodlands having more MOP supply, they're coming in as well in the north. And at the same time, Bukit Batok has a lot of recent MOP supply. But if I want to zoom in on just Bukit Batok alone, I see that I have the whole Tengah estate right beside me. And it's easily another 15k flats that are happening there. If I want to buy a HDB today at Bukit Batok, I need to understand that actually I'm going to be competing with a lot of supply 5 years down the road or 10 years down the road, where the whole Tengah estate will definitely have its MOP and people start to transact. And how would it affect my prices is that if there's a lot of supply in the market, then definitely the demand would not be so strong. And that will indirectly affect your prices, because then you have to compromise on price to be able to let it go, or you have to wait a long period of time for the right buyer to come in. So it's the same thing in the private property as well, where the supply of the units that are selling there is a lot. That will directly translate to potentially one seller to drop the price, and that will set your future benchmark for prices as well. We are seeing it already happening in Bukit Batok. And if you're buying something in Bukit Batok, for example, you need to know that the Tengah competition is going to be very high, especially those that are within 1 km to ACS. Looking at the volumes will help you give you an indicative of where the demand is drawn into, but at the same time, balancing out with the supply that is going to be incoming in the next 5 years, and that will impact you the most if you're looking to exit in 5 years. What we are seeing here over the course of these few years is that there was a dip, and then there was a period of stagnancy where there is a lot of supply in the market and not enough demand to feed the supply. So you see the prices have stagnated or dropped a little bit. That's why I think the third point about the supply is very important to understand what's going to be a competition 5 years down the road if you want to sell. And with regards to the timing is right now we're seeing a period of stagnancy and a little bit of dip. Getting to know all these different factors will be able to help you secure a little bit more security in terms of looking at the money that I paid out for this HDB today, the COV that I pay, is it going to be able to yield me good returns in future, purely just looking from a returns point of view. So as a quick summary, these are the 4 things that you might want to avoid and there's something to look out for. 1, the remaining lease ideally should not be too little so that you know that you can secure a little bit more demand and the pool of buyers will not be lessened when you want to sell. 2, cash over valuation. Know that the cash over valuation that you're paying is going to be justified by the fundamentals of the unit. So your renovations, maybe like the rentness of a EA or EM for example, and at the same time the floor level as well. Point number 3 is district oversupply. So is there going to be a lot of MOP supply? Like for example, your Bukit Batok is going to compete directly with Tengah, and Tengah is going to be a lot of units that can potentially be out for sale in the next 5 to 10 years. And also the timing. So today, if you're entering something here where the prices are at a peak, you may need to kind of wait it out a little bit more if there is going to be a period of stagnancy here that we're looking at. So if you're still quite unsure of what you are thinking about when it comes to HDB resale, if you are looking at a particular area or you're looking to maybe sell a unit but you don't know if this is the right time to sell, you can also reach out to me and I can help you out along the way depending on what district that you're looking at and where you're staying right now, what are your needs and objectives as well. So I hope this helps you to prevent all the potential pitfalls in your HDB purchase. If not, you can just reach out to me directly for any questions that you might have. I'll see you in the next video. Bye.